Today we'll talk about why Bitcoin is not a Ponzi scheme. Don't forget to like and subscribe. Let's head into it. One of the concerns I've seen aimed at Bitcoin is the claim that it's a Ponzi scheme. The argument suggests that because the Bitcoin network is continually reliant on new people buying in, that eventually it will collapse in price as new buyers are exhausted. So this article takes a serious look at the concern by comparing and contrasting Bitcoin to systems that have Ponzi-like characteristics to see if the claim holds up. The short version is that Bitcoin doesn't meet the definition of a Ponzi scheme in either narrow or broad scope, but let's dive in to see why that's the case. Defining a Ponzi scheme. To start with tackling the topic of Bitcoin as a Ponzi scheme, we need a definition. Many Ponzi schemes share common characteristics. Look for these warning signs. High returns with little or no risk. Every investment carries some degree of risk. An investment yielding higher returns typically involve more risk. Be highly suspicious of any guaranteed investment opportunity. Investments tend to go up and down over time. Be skeptical about an investment that regularly generates positive returns regardless of overall market conditions. Ponzi schemes typically involve investments that are not registered with the SEC or with state regulators. Registration is important because it provides investors with access to information about the company's management, products, services, and finances. Federal and state securities laws require investment professionals and firms to be licensed or registered. Most Ponzi schemes involve unlicensed individuals or unregistered firms. Avoid investments if you don't understand them or can't get complete information about them. Account statement errors may be a sign that funds are not being invested as promised. Be suspicious if you don't receive a payment or have difficulty cashing out. Ponzi scheme promoters sometimes try to prevent participants from cashing out by offering even higher returns for staying put. I think that's a great set of information to work with. We can see how many of those attributes, if any, Bitcoin has. Investment returns, not promised. Satoshi never promised any investment returns, let alone high investment returns or consistent investment returns. In fact, Bitcoin was known for the first decade of its existence as being an extremely high volatility speculation. For the first year and a half, Bitcoin had no quotable price, and after that, it had a very volatile price. The online writings from Satoshi still exist, and he barely ever talked about financial gain. He mostly wrote about technical aspects, about freedom, about the problems of the modern banking system, and so forth. Satoshi wrote mostly like a programmer, occasionally like an economist, and never like a salesman. Open source, the opposite of secrecy. Most Ponzi schemes rely on secrecy. If the investors understood that an investment they owned was actually a Ponzi scheme, they would try to pull their money out immediately. This secrecy prevents the market from appropriately pricing the investment until the secret gets found out. For example, investors in Bernie Madoff's scheme thought they owned a variety of assets. In reality, earlier investor outflows were just being paid back from the new investor inflows, rather than money being made from actual investments. The investments listed on their statements were fake. And for any of those clients, it would be nearly impossible to verify that they are fake. Bitcoin, however, works on precisely the opposite set of principles. As a distributed piece of open source software that requires majority consensus to change, every line of code is known, and no central authority can change it. A key tenet of Bitcoin is to verify rather than to trust. Software to run a full node can be freely downloaded and run on a normal PC, and can audit the entire blockchain and the entire money supply. It relies on no website, no critical data center, and no corporate structure. For this reason, there are no issues with paperwork or difficulty receiving payments, referencing some of the SEC red flags of a Ponzi. The entire point of Bitcoin is to not rely on any third parties. It's immutable and self-verifiable. Bitcoin can only be moved with a private key associated with a certain address, and if you use your private key to move your Bitcoins, there's nobody who can stop you from doing so. There are of course some bad actors in the surrounding ecosystem. People relying on others to hold their private keys have sometimes lost their coins due to bad custodians, but not because the core Bitcoin software failed. Third-party exchanges can be fraudulent or can be hacked. Phishing schemes or other frauds can trick people into revealing their private keys or account information, but these are not associated with Bitcoin itself. And as people use Bitcoin, they must ensure they understand how the system works to avoid falling for scams in the ecosystem. No Premine. As previously mentioned, Satoshi mined virtually all of his coins at a time when the software was public and anybody else could mine them. He gave himself no unique advantage in acquiring coins faster or more easily than anyone else, and had to expend computational power and electricity to acquire them, which was critical in the early period of keeping the network up and running. And as previously mentioned, the white paper was released before any of it, which would be unusual or risky to do if the goal was mainly about personal monetary gain. In contrast to this unusually open and fair way that Bitcoin was launched, many future cryptocurrencies didn't follow those same principles. Specifically, many later tokens had a bunch of pre-mined conceptions, meaning that the developers would give themselves and their investors coins before the project becomes public. What do you think about Bitcoin? Let us know in the comment section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.